Welcome everyone. If you have ever had an issue plotting trend lines properly and you seem to fumble that from time to time, not sure exactly where to place them, how to place them, this video is going to be for you. We're going to be going over some advanced technical analysis when it comes to trend on one specific topic, which you're going to see here in a minute. And let's get right into it. I'm Pat Mitchell. I've been a professional trader for the past 11 years, and I'm here to give you quality free education here on YouTube. Let's dive right into the charts and get into this lesson, because I promise you by the end of this, if you do pay attention, it is only going to benefit your trading and your technical analysis. So let's rock and roll. Okay, so we have cues, and I'm going to zoom in a little bit here. And right now, obviously, you can see that there are two trend lines, a green and a red. Okay, so that's going to be the topic of discussion here today. It's important to understand that when you have two trends, so you have a main trend. A lot of people, when they're looking at the charts, they'll initially just see one trend. They'll just see the top levels, the top wicks, a very traditional trend. And that, for the most part, even included in this example, won't matter if you're a little bit off, because there's always going to be a little bit of variation when it comes to and tolerance when it comes to plotting your trend levels or trend line, sorry. But the devil's in the details, right? Like, this is what really separates professionals from amateurs when it comes to trading in any capacity, is the details, the subtleties, why these little things matter. And I'm going to explain in this video why it matters, whether you're plotting a trend line on the top of green candles or the top of red candles. And that's specifically what this lesson has to do with, because there is a difference between those two types of days. So before we get into the trend levels and trend lines, I'm going to explain the difference between a green candle and a red candle. And this may seem very elementary to a lot of you, and you may want to fast forward. Don't do it, because what happens in the world of day trading is a lot of traders, they get this ego, right? And they want to think that they can brush past the basics. Those basics are so key. And one of the reasons why people brush past them is because it's basic, the basics, the fundamentals. Because it's like, no, I'm good. I know what a candle is. Because I can personally tell you, I've dove into a lesson with my mentoring members where I specifically discussed the wicks and the bodies of candles for an hour. Now, some of you may be rolling your eyes at that, but I'm telling you, by the end of that class, it really opened up people's minds. And I'm just going to give you a small little taste of that right now. So let's talk about the difference between red and green candles. Let's start with a green candle. So it all is how it opens up and how it moves throughout the day. Now, when you take a look at this, and this is a large part of my strategy, is the color, not necessarily the color, but how these candles open. So at the market open, it's first directional pick and what it does. So just to draw something out really quickly here for you, and I should actually go to a 1 minute chart or else my drawing tool gets all messed up. But let's go over a green candle and the properties of a green candle. So let's say you have a support level here and a resistance level here. And this line separates, this is pre-market, and this is regular hours. Okay, so market's doing whatever it wants to do pre-market, and it's about to open up. So market opens up, and now this is the important thing. First directional pick, what it does. What direction does it pick? Because generally speaking, where the odds are at the open, when we open, if we dip, we come down into support. By the end of that day, we will close green. It will close higher than it opened. Okay? So this has a lot to do with what we're going to discuss with these trend lines. So please pay attention. Now let's draw on a red day. At the open, if we pop, we come up into resistance. By the end of that day, it will then reject resistance and come down and close lower than it opened, thus creating a red day. So this here, a green day, and this here are the properties of a red day. Now, remember, there's always going to be variation. There's always going to be subtle differences. But for the most part, I'm talking the majority of the time. That right there is key. It's crucial. Now, this is something that, again, it might sound very basic to you, and maybe that's, you might be brushing over this. Don't do it. I'm telling you, right there, what I've just given you on first directional pick is so crucial. It's so crucial to understanding the movement. That is the very basis of price action and how we move and how we open, whether we pop or we drop first directional pick, and whether we test resistance first or test support first is going to matter. Now, again, there's a lot of subtleties there, and there's a lot more to it than what I just explained. But for the most part, that gets us going. So I'm going to clear all this off, and now we're going to go back and we're going to talk on the daily chart. So talking about this, why does what I just say matter? Because when we have trend lines, and you can see the top trend line is based off of the green, okay? And this one, the lower trend line, which is the red trend line, is based off of the red days. You have multiple touches on red days and multiple touches on green days. So why does it matter, and why do we need to separate those two? Now, it won't be all the time. You don't need to do this all the time. I'm just saying the time to do this on the daily chart is going to be when you have, by your eye, you can see that, oh, I have two trend lines there. Which one should I go with? And generally, it's going to be based off of green days. Your eye will draw to those green days, and then your eye will draw to those red days. And it matters because of how that candle moves, and more importantly, the volume, where the volume on that day truly is. Because on a green day, it's going to be different than a red day, right? I think we could all agree with that. The way that the movement throughout the day and where the bulk of that volume of the day is, that's going to be very different between a green day and a red day. And that's important, again, because of where your support is. Like, what is true support that is going to have the highest odds of success the following day to buy that support, or that resistance? Like, where's the volume? Where's the true volume at on that specific day? Volume's important. And the reason why volume is important is because the people and the traders that were in that position the previous day will then, if it comes down into support or resistance, whatever way you want to look at it, whether you have shorts or longs in it, they will protect their position based off of that support. And that's why it's important. So let's get into this daily chart a little bit more. And I'm going to really kind of stretch it out just to make it nice and exaggerated for us here. So you can see the difference. When I throw my crosshairs up, it is going to snap on the next day. This is where we are right now. Market's going to go open up and it's going to push. And you can see we're gapping up. So right at this gap up point, which is right here, this yellowy orange level, depends on what it does at that market open, whether we're going to test this red day trend or this green day trend. And I'm going to pull up a little figure for you just to explain a little bit. So what I have here is, because on this chart, this is actually within about a point and a half of each other. So it doesn't overly matter. It is within your risk tolerance. So even if you're wrong, it doesn't matter. And remember, when it comes to trading, and a lot of people get this all fucked up, it is not about being right or wrong. It is just about strategy. Where are your odds to place your trade? What is going to give you the greatest odds of success? And that's why it's important to go by details. So if we're going to open here and we pop at the open, it's most likely, the odds dictate, it will come into this red day and then fail back down to test support, which could be a moving average, high of day, or previous close. If it dips at the open, So from where we are right now, it's either going to hold this moving average, because this moving average here, the 20 SMA, is roughly going to open up around this yesterday's highs. Or if it slips that support and wants a better level of support, which it most likely will, because there's actually a little trend line here, and that trend line is going to be real close into that previous close, it will probably want to come into that previous close at some point today. And that would be its true support. And at the open, if it dips, it comes down, first directional pick, it will most likely close on a green day, not a red day. Okay, first directional pick. Remember that first lesson I told you. And that's why it matters. Okay, so let's go back into that chart that I just showed you. So if we're going to open up, and I'm going to change this color a little bit. Let's go with blue. So this would be today's action. And remember, and although that this is a little bit reversed because it was a green day yesterday, it's okay. And we're gapping up. So this trend isn't going to quite line up with that example, but I'll go over today's example on the charts, on the actual charts here in a minute. So again, what level? So the green, let's call it number 1, and the red is number 2. So number 1 or number 2, if we have a support level here, we're going to open here. This is where we're going to open. What if it dips? So at the market open, it comes down. First directional pick is down. Number 1 or number 2 would be the resistance level that it would most likely, where the odds would dictate, where would it go? Number 1 or number 2? I will give you a quick second just to answer. If you answered number 1, you would be correct. Now, that's not saying that when it dips and it comes down and it starts making its way up, that it won't reject that resistance level of that red trend line. It will. It'll pull, it'll take a breath, and then it'll push to its final destination of this green day. And it'll come right into that. And when it does that, it'll pull back and it'll most likely create roughly the same size wicks that it did before. Why? Because this is current price action, and that's getting a little bit far ahead of what we're going to be discussing for this video, so that's okay. I don't need to quite get into that. What today's video is about first directional pick, and when you have 2 trend lines, like your eye catches, like if you take a look at this, and I know it's all messy right now, but when you take a look at this, like your eye immediately gets drawn to almost 2 trend lines, right? It's like, oh shit, which one do I pick? And that's why I'm going over this, is to clear that up. So how do you set this? If you have two trend lines, right, that are there, and it's like, you don't want to draw out a bunch of technical analysis on your charts, which I do agree with. I don't like messy charts. I like them very clean. You can easily do that upon first directional pick, because obviously if we're going to open here, you have time before it tests this level or this level. So at the open, if it pops instead of drops, will it go to number 1 or number 2? It will go to number 1. Why? Because it will recreate the same action as this day, and this day. Now, again, there can be variation, and it can come up a little bit higher. It doesn't need to top tick that trend, but that is where you're definitely going to want to start putting pressure on that trade, because previous history will dictate today's action. So why is this important? Well, it's important because let's say this level, so this red trend and this green trend, are $1.85 apart. Now, some of you might be comfortable with 2-point risk depending on the price of the stock, and that's fine. I am, actually. But my general risk is about $1 per share. Now, in volatile markets, I'll bump that out to be about $1.50. And I'm even comfortable going to this. I'm comfortable going to $2 depending on the trade. Okay? And depending on how much protection. Again, these are all other lessons that we could be doing here. But if it's $1.85 away, and let's say that is far too much risk for you, like your account can't handle it, your emotions can't handle it, and it dips at the open. Well, you know that you should not be starting in at this first level of resistance, which would be this first or the second trend, I guess, the red trend number 2. You know that you can't handle that risk, and the odds would dictate that if it dips, it will be a green day. And you got to trust me on that. Like, I've been doing this for over a decade, guys. What I'm telling you, you can take to the bank, okay, with reasonable odds of success. So at the open, if we dip and then we start coming up, you want to really wait for this level to start averaging in. Don't wait perfectly for the level. You can start in, somewhere in here and start averaging in, coming into that level. And if it pops at the open, you can immediately start getting in on this into that trend, because again, the odds would dictate if we pop at the open, first directional pick, it will be a red day, and it will follow this trend. If it's $1.85 away and your risk is too wide, then it's too wide, right? Like, you can't get in on that. It's out of your risk parameters. So remember, anytime I'm giving lessons on any of my videos, I'm talking from a pure strategy and professional perspective. I'm not talking about gambling. I'm not talking about bullshit that you'll see out there where people don't care about risk. It's just about making that money. That's not what I'm here to teach you guys. I'm here to teach you the proper way so then you can do this successfully, wildly successfully, for the next 10, 20, 30 plus years. I want you guys to be long-term consistent traders, not a flash in a pan and an overnight bullshit. I want you guys to be able to do this. So when you're executing these trades, and now let's go over if that risk is well within risk parameters. So let's say the first one, the risk was 2 points. It's outside of your risk, right? So I told you what and how to get into that. Refer back to that if you need a refresher. Now, let's say it is 1 point away. These trend levels, trend lines 1 and 2 are within 1 point. So it's well within your risk tolerance, right? So now, how do we get involved with this? So if it's 1 point away, let's say we dip at the open. We dip, we come into support, comes back up. Start in here, execute. Why? Because it's well within your risk tolerance. And it's not worth missing the trade because we have 2 valid trend lines, right? You see what I'm getting at? So if it's within risk tolerance, these 2 levels, the distance between here and here is within your risk tolerance of 1 point, $1.10, $1.15, whatever your risk tolerance is, take it. Execute the trade here at that first trend line. And then save your bullets and add properly and be patient. Don't add all the way up and get in too big. Don't do that. Remember, not every trade needs to work, ladies and gentlemen. So it comes into here, you execute that first trade, it pops, comes up, keeps coming up. As it approaches this, don't wait perfectly for that level. We do not wait for levels. You get in prior as it's coming into that level. You execute, and then obviously you save some for your risk. Remember, we need to still risk off of that. This is just risk tolerance, and this is your actual risk. Okay. Now, if this was a real world scenario, just as a little piece of bonus information, where would I risk off of? I would be risking off of this gap fill. That's wide. Okay. It's wide, but because I know I'm protected, heavily protected in this trade, I'm going to give it that risk. And personally, I don't care if it's 3 points. If I'm protected in a trade, I will execute it and I will work that trade. I just don't start in with a lot of shares or contracts. I start in very, very small and start tapering in. But again, that is another educational piece of content that I could give you guys down the road. That basically sums it up. It's important to draw out green day tops and red day tops if it gives you that, right? It doesn't always give you that, right? It's very clear sometimes that it's just red day and green day. It's just a typical trend. I'm talking about those sneaky trends, right? And it's important to do that because we need to know how that day, those days moved, and where the greatest odds of success are for it to actually come and test what trend. Because sometimes there are multiple trends. Sometimes there's 3 trends. Sometimes there's 4 trends. And I could go over that with you, and I could give you a scenario for each one of those. It would be a very long video, and that's more for members. And that's the type of stuff that I do discuss on a daily basis. And this is why I and my members have the success, statistics as we do, because the devil's in the details. It is about the subtleties. It is about being professional, and it is about following strategy, and it is about never deviating from that type of stuff. This is how it needs to be done. So if you happen to be watching this, and maybe you're a trader right now that is more of a gambler, you don't really take this seriously. It's about making money, and it's about, making as much money as you possibly can on any given trade, right? You need to cut that shit out, and you need to start looking at this professionally, because it's not just about you and your success and you making it. Your family, most likely, if you have a family, is relying on you, and they're counting on you to do the right thing. And when you're behind these charts, you're behind these monitors, do the right thing. Be a professional. And if you want to become a professional trader and be part of a professional service that can actually get you there, no bullshit, come to tricktrades.com. And if you're not interested in that, that's okay. Enjoy my free content, no problem. I put a video out every single week that's going to be a banger of a video, giving you tons of technical information, as well as mental and psychological information as well. That's absolutely going to help you. But if you do, you have to subscribe to the channel. That's the cost. If you are already subscribed, please make sure to like the video. And if you have any further questions, you can always ask in the comment section. All I ask is be respectful, and I will absolutely answer your questions, guys. No problem. Have a great one. On to the next one. Adios.